we were you were we were in middle of understanding the fact that how well do you think the sustainability of the demand would be? Do you think that demand, once it is back, it's like animal spirits, can it also come back and go back to pre-COVID levels very quickly?
Very much so, because I have been traveling a lot into interiors, into cities, been on the ground, meeting customers, meeting people in general. The confidence, especially because of the vaccination, is very, very high, and people want to go back to leading a normal life. I'm very confident, we are very confident that the pre-COVID levels have already returned. And while we may not obviously see a growth like Q2 because that was exceptionally high, but we will continue to see growth which is very satisfactory to the company.
Would you, when we spoke last time, you said, look, we are not cutting our capex, we are not cutting our new store expansion, we are not going to do anything which could be very inward looking. Have you changed your view? Do you want to go more aggressive on that, given that now things are normalizing, the confidence and cash flow visibility would be stronger?
Actually, even at that time, we were continuing to be on our kind of normal thinking in terms of expansion. So, in fact, we opened stores in towns like Ambikapur, which very, very small towns. A big Tanishq store in Ambikapur in Chhattisgarh is pretty aggressive. And that aggression was there before, that aggression continues now. Obviously redoubled in a way, and we are very confident because the normalcy has returned.
Right. What is happening to the non-jewelry part in terms of the demand trend?
The eye care business, has certainly grown compared to pre-COVID levels. The watches business is very close to 100% of pre-COVID levels, and some of the other categories like perfumes and saris are also in that category. So the more the discretionary the categories, the more behind in a sense their recovery is, the less so the categories like jewelry and eye care have already gone into growth. But in October and November, we expect all categories to be growing.
Good morning. I was going through certain brokerage reports. For example, Morgan Stanley has written that they're very pleasantly surprised by the beat when it comes to the margins. Can you give us any update on how you're planning to tackle cost pressures and maybe sustain the margins or even expand as far as they go? Because you're also going to be increasing stores, and Titan has not been giving any discounts either for the last 18 months.
Actually, the cost control program in Titan began in November of 2019. And fortunately, we had a 6-month head start before COVID came into our lives. And we have done a fair amount of institutionalizing the ownership of cost control into at least 100 or more people, senior managers in the company. And that process as well as that culture was quite deeply embedded, and it continues now into the 20th or 24th month since inception. And everyone is owning the profit and loss account and the balance sheet of the respective businesses. And fortunately, we have not had any significant input cost pressures. And because of the manner in which we worked with our vendor partners and our factories, our supply chains have been by and large stable. Obviously, the Q2 kind of growth that actually happened we had to really become very agile to deal with that demand rise. But otherwise, by and large, our supply chains have been stable. We have supported all our vendor partners and carriers and employees with loans and grants starting April 2020. So they were a stable, system. We just had to become more agile to deal with sudden spikes in demand, which, because of collaborative working between the company and the partners, we were able to manage, very well. So there is nothing particular that we are, concerned about or worried about from a cost pressure point of view. We've managed to deal with it every month over the last close to 2 years now, and we'll continue to deal with it without flapping about.
Okay. And in the first half of the year, you've opened 15 new stores, taking the total count to about 392. With, you're saying there have been cost control programs in place. We're also seeing the comeback of the real estate story. Rentals may go up. So with all of this going on, will you continue with your store opening program? You were just telling Nikunj how you've been opening in smaller cities too.
Very much, because the opportunity, particularly for the jewelry business and the eye care business, and to some extent even the watches business, and of course the Tanera sari business, the opportunity for the expansion is huge. I have visited the really smallest of towns in the last 3-4 months, and I know how big the opportunity for a company like Titan is. So it gives us even more confidence, these kind of visits, to see. For example, we've just opened a store which I've never known, in a town called Dumka in Jharkhand, right up in the northern Jharkhand. And Dumka is a very small town, and we opened a Tanishq store, and the initial response has been fantastic. I myself was there for the inauguration of a Tanishq store in Ambikapur, which is in Chhattisgarh, and a Titan and an I Plus store in the same town on the same day. And those towns are waiting to be, transformed from the retailing standards that we bring to those towns. So our aggression in expansion will actually continue, and in fact will go up a notch in the next 1 year or 2 years.
Oh, so you're going to increase the pace of the store openings. Well, let's see how all of this pans out. That's Titan, which has been firing from all cylinders. It is a beat as far as the earnings go. And from all of us here at ET Now, here's wishing you and your entire team a very happy Diwali.
Same to you, everyone at ET Now. Thank you very much.